when they say they predict, certain properties to get better or not, as we all know, all it takes is one announcement to turn everything upside down. So we've yet to see where it's going to go, but probably not a heck of a big difference from 2025. So,
Jyoti Chaudhry.
Hi, Navtaj. Thank you for having me and Happy New Year to all of you. Now, I know the million-dollar question that all Canadian residents are facing is what is expected of the real estate market in 2026? While nobody has a crystal ball, one has to estimate certain trends and plan accordingly. As per National Outlook, the 2026 Canadian real estate market is expected to be a reset year with modest national price growth around 1 to 3% and increased sales as lower stable interest rates encourage buyers. But condo prices will soften in major cities like Toronto, Vancouver due to oversupply. The key trends include a shift towards more balanced markets, increased supply from built to rent projects, and varied regional performance, with a focus on affordability and the impact of government policies on immigration. As you know, there are shifts in immigration as well, and that's going to impact the supply and demand in the real estate market. So basically, the forecast suggests a modest national price increase, with some sources predicting around 1 to 3% growth, while others see a slight decline, minus 3.7% as markets balance. As far as sales are concerned, a rebound in home sales is anticipated, potentially reaching the highest level since 2021, driven by more stable borrowing costs. So the markets are going to balance and move towards a balanced condition, easing pressure from the intense sellers market of previous years. What will be the key trends and factors? Key trends and factors: there will be lower rates for mortgages, removing the urgency for buyers and allowing for more considered decisions. So again, like my friends have said earlier, it will be a buyer's market, not a seller's market. That's unfortunate for the sellers, but good for the buyers. As far as supply is concerned, increased construction, particularly for build-to-rent properties, aims to boost housing stock. Condos are expected to continue declining in prices in major urban centers such as Toronto, Vancouver due to oversupply. Now, there will be regional variations, meaning that different housing markets will react differently to the balance in the prices and difference in price movements across Canada. Also, government policies such as federal and provincial housing initiatives will play a crucial role in increasing supply. So the buyers can expect more opportunity and a focus on value, while the sellers are going to have a hard time selling the properties for the prices that they would like to sell them. There is a bare minimum price that they need to get, and which may also be difficult to get. So some others also predict declines in Ontario due to unemployment and mortgage renewals. Now, as far as investments are concerned and the need to speak to a lawyer before making an investment rather than after, it is important to stress that it is always better to speak to a lawyer before, because the lawyer can take care of certain contractual terms and conditions and look out for the benefit of the client before the agreement is signed, as opposed to after the agreement is signed, in which case, there are terms which cannot be changed, which cannot benefit the buyer. So my opinion and my advice is to speak to a lawyer before signing any contract, any agreement of purchase and sale, and before signing on the dotted line.
All right. Thank you, Jyoti. David
You're
Grossman.
welcome. Sorry?
Okay, hi there. Yes, all right. So I'm on the treadmill of life
Okay.
right now. So hopefully I can walk and talk and breathe at the same time. So the answer to the question, could Toronto and Vancouver home prices really collapse? I would say no. I believe these are mostly very resilient marketplaces. Canada in general is solid, especially in those two major centers. I think you can see more of what we've been seeing, which is a correction. And it does depend on what it is we're talking about, right? So we all know that there's an excess supply of smaller condos, especially, and that particular segment of the market is having problems. But in general, I think where family homes are considered, I definitely don't think we're going to see anything that resembles a collapse. We have, although we have slower immigration, there is still, I believe, if you believe any of the reports, some long-term housing shortage. And you also have pretty good interest rates right now. It's been said before, I think they are probably at the bottom right now. If you look at interest rates over the last 30 years, the average 5-year fixed rate was in the high fours. So right now, if you can borrow money at 4%, sometimes higher, sometimes lower, that's pretty darn good. And there are steps that the insurers can take, CMHC, and they do encourage the banks to work with people. If it means extending amortizations and allowing more refinances. A number of years ago, they eliminated refinances if the loan to value was higher than 80%. So, I mean, they could change that if they wanted to help people who are dealing with, let's say, a lot of unsecured debt that's weighing them down. There are things that they can do. I think most people still have equity in their homes. And don't forget that people who bought even at 1.5% interest rates 5 years ago were stress tested at 5.25%. So unless they lost their job, then they should be able to handle a mortgage at 4%. So I don't think we're going to see anything that's quite like a collapse.
All right. Thank you, David. We're also going to introduce our first time this guest, Tanya Grubik. She's from Vancouver. Tanya, it's all yours, my friend. Unmute yourself. Tanya.
Hi guys, thank you for having me. Good evening, everyone. My name is Tanya Grubik with TNG Real Estate Group, Team 3000 Realty, family-run team serving Metro Vancouver and the Fraser Valley. Okay, I prepare here something.
So let's talk about this one first, then you can talk about later on.
I agree to Barry and to Gary and to pretty much everyone. We are on the same page. So I want to share what I'm seeing on the ground here right now in Metro Vancouver and nearby markets as we move into 2026. What I notice most is not lack of capital, but caution. Investors are more careful, lending rules are tighter, assumptions are reviewing more closely, and decisions take longer. Deals are still happening, but they are moving slower and with more discipline. There is also a clear gap between what we hear about housing supply and what is actually selling. In fact, just today, BC Real Estate Association released data data showing that activity remains below the 10-year average, with the slowdown still concentrated in the lower mainland, which aligns closely with what we are seeing in the market. New constructions exist, but pricing, affordability for end buyer, and assignment rules are creating real challenges. As we look toward 2026, homes people can actually afford are likely to perform better than projects built primarily for speculation. Rules and regulations are no longer a side issue, they're central and to every investment decision. In British Columbia, residential real estate operates in tenant-friendly environment where tenants often have stronger protections than landlords. I'm not sure about Ontario and Quebec. Rental regulations, minimum lease terms, and financing conditions frequently determine whether a deal works even before the numbers are finalized. Strong investors are adjusting strategies first rather than chasing high returns. Overall, my outlook for 2026 is not negative, it's selective. Opportunities will favor disciplined investors with clear exit strategies, realistic expectation, and strong local knowledge. In today's market, success is driven by discipline, not speed. Thank you for having me. Yeah.
Great, thank you, appreciate it. You're going to be back soon. Leonard, are you there, Leonard?
Yeah, I'm here.
Okay, your opinion about Toronto market?
Happy New Year, everybody. What we see is in our stats, like the office markets are finally stabilizing. Vacancy rates are starting to fall, and leasing activity is picking up for us, especially in quality buildings in major cities. Investors are returning, and new capital is flowing back into prime office spaces. But meanwhile, the condo market is under real stress. Oversupply and weak demand, and international immigration cuts have pushed prices down and inventories up. But when you look at the Toronto and Vancouver condo sales have plunged, and many projects now sit with unsold units. But when you look at for sellers, days on the market are lengthening and prices are falling. For buyers, this could mean more negotiating power. But regardless, recovery won't be instant. But this presents us with much more better opportunities in a different ways. We're getting able to make our investors buy bulk deals. We're putting together a lot of bulk deals to purchase for our investors. We're looking at different strategies. So bottom line, the office space is rebounding slowly but surely, while the condo segment is still working through an oversupply and weak demand. But different strategies for different properties types apply. That's it.
All right. Vladimir, anything you'd like to add up?
Yes, I would like to add, it's always go to the basic. So investing has to make sense, not waiting for appreciation, but have to make sense. Let's say if you buy it, you rent it, you calculate it properly. And another thing, but it's really the biggest thing what I learned from Navtaj, actually, you have to be creative. It's sometimes when you change zoning or you do stuff, what can multiply property price like 10 times by just doing stuff what other people don't see. So sometimes you have to see like outside of the box and think more creative, because if you just rely on prices always go up, it's when we seeing right now, it's not always working. But when you stick to the basic and thinking outside of the box and be more creative, I think it's very beneficial.
Excellent. First and foremost, I'd like to let you know that speculation or pre-construction, especially in Vancouver and Toronto, is dead. Now, there are new strategies because every time something happens, something new comes, something new opens up. So what's happening? So there are a lot of opportunities. We're going to be sharing a lot of opportunities with you tonight, as well as our fellow guest speakers and experts as well. So there are tremendous amount of opportunities because there's no competition. You can owner financing, you can pick and choose, no more, those bidding wars and so on. And the people are hurting. Who is hurting the most? Number one, baby boomers. Why? They were hoping that, hey, I can get 1.5. Now I can't get 1 million anymore. And what are they offering you? And they're afraid it may gonna go lower, so they're offering you owner financing. I put an offer that I want to put 10% down, owner carry a mortgage for 2 years, no interest, no payments. Would they bite for it? I don't know, but we will see. But this is the creative part of Canadian real estate, though. Some of you who may not be aware, Habitat of Canada needs your help. If you can volunteer, you want to have some leftover material, please pass it on. If you're going to buy some material at dirt cheap, please support the Habitat of Canada. So moving forward, what exactly is happening? What are we seeing in Canada? Well, price growth maybe 1%. Toronto, Vancouver may going to hurt. The price may going to drop by 4 or 5%. We'll see. But who's doing well? Winnipeg and Quebec City are booming. Whoa. Why? Now, again, real estate is a lot more different than Toronto and Vancouver. Canada is far beyond Toronto and Vancouver, but there is something else I want to share with you. It's all based upon regional. It's hypo-local, they call it. So again, what is happening in Calgary, Halifax, or Quebec City are totally different altogether what's happening in Toronto and Vancouver. One should be aware of it. We cannot put a blanket statement to it. So here is something I want you to look at it. What happened to rental market? 1.4 million temporary Canadians have to leave last year and 1.4 million this year. So 2.9 million residents of Canada who are even temporary are leaving. What's going to happen to the rental market? Soften up. Rent's going to go down. These are the facts, black and white. But again, they create opportunities, though. Those who are slum landlords renting it by room, by bed, or whatever, they can say goodbye. They might have to face the CRA, they have to face the city, all the illegal stuff that was not cool at all together. So what is happening in rent? The rents have dropped all across Canada for the last 4 years. It's not that bad. But again, if you look at it from December, it was about $1,700, still 2,060. Still good, but it may not reflect it because I'm going to share some other strategies with you tonight, which are going to be extremely powerful, extremely, extremely powerful. If you can implement any of this information tonight in your next 5 years, 10 years, whenever you want, any of the experts have given you their lifetime experience. Like Barry Lee, who has been in business for more than 50 years. Some of these people have done a couple thousand deals. We have superstars here who have done deals in every province in Canada. So those are the great people. So here is the rent. If you look at it, Toronto, Calgary, Edmonton, Montreal, Ottawa, and Vancouver, we are not doing that bad in Toronto. But if you look at it in the market of like Edmonton, the market is still cheaper. Everybody is gone towards Alberta. A lot of people are moving into Alberta for a reason, but there is something one has to be very cautious about as well. So what else is happening? Canada is experiencing a boom. What? Real estate boom? Whoa! What kind of boom is that? Rental construction. 180,000 units are under construction across Canada. Why? Because there's a shortage of housing. Not everybody wants to buy it. People love to rent it. We love them all. We love our renters. Why? Because they're great for investors. They're looking for a high quality tenants. As a matter of fact, I'd like to show you tonight that in one of the most dense area in North America, where they have more restaurants than anywhere else in North America, guess where it's located? Toronto, on Queen Street, Queen and Ossington. What is the rent there like? I'm going to share with you. Now, what is happening with pre-construction condos? Time to put them into sleep, minus 60%. The high-rise condo, the cost to build it, forcing builders to file bankruptcies, cancel the projects across Canada, especially in two major cities, Vancouver and Toronto, or GTA, or a little bit of ripple effect it has. It is hurting. It may not gonna come back, but it's gonna create opportunity 5 years down the road because there are no more condos. The condo market will come back maybe 5 years down the road, but it'll be expensive though. But again, if the condo making sense, it is 2-bedroom, it is cash flowing, maybe it's good enough. But again, there's a specific market in Canada. It's called renting for ultra luxury renters, ultra wealthy tenants. They are looking for a quality place. And I'm going to be sharing with you in a minute as well. We go along. So here's something great news. In Ontario, the fire code says, hey, listen, you got to have carbon monoxide in every floor. That's the law in Ontario. I do believe it's a great practice to have carbon monoxide no matter where you are in Canada. In my opinion, fire hazard is one of the biggest things we investors face. It's good to have them regardless. Next thing, what is happening? There's another market opened up. Baby boomers, I'm one of them. Gary Lebo is another one. Some of you who are born after Second World War are over 65. What is the market like? 5.3 million seniors. They don't want to own the property anymore. They want to rent. And what are we offering? So I have spoken to a couple of small builders, and they are going into niche market. This niche market is all about assisted living. They're going to pay you tremendous amount of rent. They don't get the pink slip. They don't have to worry about unemployment. They don't do wild parties, and they pay great rent. So senior housing in Canada is on fire. It's a great opportunity for investors if you look into it. Now you got to be very careful. What do you offer? What you do not offer? Do you need licensing? So there is a bit of a gray area. If you are going to do it with assisted living, make sure you're involved with a very large corporation or you're part of the small owner of the limited partnership. Be aware of your general partnership. Again, get your legal advice up front for more than one person, not from me only, but only from your CPA and your financial situation. It's a great opportunity out there. So values have dropped, so big deal. They went up, they went down. So this is the seesaw we have gone through many times over. If you're relying upon only the value going up and down, that's not a good thing to do. So here we go. Vancouver. People say, where are the opportunities? Can you buy the property at deeply discounted prices? Absolutely. Where are these deals? Can you buy them at 80% discount? Yes, there is. Here is the address. This property gets sold for $272,000 in Vancouver when the value is 1.7. Is that a good deal? An excellent deal, in my opinion. No matter which way you look at it, but there was some trouble. What is the trouble? They call it manifest error. The owner have died in 2000, in a couple of years ago, and he paid only $470. So again, if you do not know how the tax lien works in Canada, come and learn. And then you will find that in one opportunity, can you make 1.3 million? Oh, absolutely. Would you rather be an investor? Absolutely. Would you rather be an uneducated investor or educated investor? Your choice. You choose. Which one is better for you? Again, these are black and white. Check them out. If anybody wanted to copy a slide, let me know. We'll be happy to share with you. Can you add a value of $500,000 in a Toronto home? Absolutely. Can you add a lot of value? Yes, you can. And I'm going to be sharing with you shortly how you can add a lot of value to your property. Can you add up a lot of extra passive income? Absolutely. Can you do it all across Canada? Yes, you can. Again, when there's a problem, there comes opportunities. How do we add opportunity to the problem? This is the trick. Again, in Canada, as we speak, David is going to be speaking a little bit more about it. Maybe a couple other people speak about it. The defaults or mortgage default. Are there a lot of pre-foreclosures? Yes. Are there a lot of power sales? Yes. Do they sell cheap? No. That's law in Canada. So arrears are up by 63%. That's a little bit disturbing. But again, people come up with it. You go to David Grossman or another mortgage broker, and they can come up with a much better solution for you, as long as there's better equity, and they can work around it as long as you are able to make some sort of payments, or you can have skip a payment plan or something. There are something. Here's the great news. What's the great news? Those little 200 square feet, the mini condos are dead. What is demand? 3 bedroom. What's the rent like? They're going up 30%. Again, this report came from where? CABC. Now, if you look at the trend, it tells you exactly where to invest. If you're going to build something, would you like to build a 1 bedroom, 2 bedroom, or 3 bedroom? You want something. Bachelor apartments are declining. Again, just thought I should share with you. Facing a power sale, we can help you regardless. So power sales are up by 639%. Ugh, that's hilarious. Because a lot of fellow Canadians got into speculation, bought several properties, don't have enough, don't have backup, and they're losing it all, including their own principal resident. Unfortunately, it happens every time the boom bursts. Private lending is up and up. It's okay to start with private lending, the hard money lending. What's happening with mortgages? David is going to help us quite a bit about, hey, what can we expect? This is going to be a tricky one. 2026, a lot more Canadians have to renew their mortgage. It's going to hurt them quite a bit, but there are multiple opportunities. As I said, every time you face a problem, every time you have a challenge can be one, and you got multiple solutions for it. So, David Grossman, it's all yours, my friend. David? Is he still here? David?
Hi, yeah, I'm here. Sorry, just had to unmute. I have you. Okay, so first of all, mortgage arrears, they might be up, but they're still low. I mean, they're from the stats that I see, they're currently well under 1%. So if mortgage arrears are, even 0.5%, which I believe they're actually lower than 0.5%, and they go up from 0.5 to 0.75, that's a 50% increase. Sounds like something significant, but I mean, it's still pretty low. Okay, so, and as far as the renewals, yes, lots of renewals, but again, mortgage rates in the 4% range. Look, a couple of years ago, mortgage rates were up around 6%. And yeah, people who are renewing at 6%, that hurt for sure. Okay, but renewing at 4% is not bad, or in the 4% range. So I don't think there's any tsunami coming unless the economy goes bad. And as I alluded to earlier, if somebody loses their job and they can't pay their mortgage. But if they still have their job and they were stress tested when they took out their mortgage, they should be okay today. What else? As I said before, mortgage rates down around 4%. You look at the 30-year average of 5%, fixed 5-year rates. We're well under that now. It average was in the high 4s. So rates are good now. What's the Bank of Canada expecting this year? Well, when they met late last year, they said that they thought that where rates are now are where they need to be for the foreseeable future. It's kind of in a balanced zone. So most economists think, and the Bank of Canada has signaled, lest there's anything new that I've missed, they've signaled that the overnight rate, which directly affects the prime rate, is likely to stay where it is, probably for most of this year. Some economists think it might go up later. Fewer economists think it'll go down further. So, I mean, some people are looking at variable rate mortgages. I mean, you can get a variable rate mortgage now at 3.5% roughly. Okay, so that's a pretty good rate, but of course, the variable means it can go up, it can go down. So there's some risk there, but you can also get a 3-year fixed rate mortgage for under 4%. So, that's kind of that's what I would do. I would probably go with a 3-year fixed. I've got one lender, they're offering on purchases a rate of 3.8%, which is pretty good, I think. So, so there's good opportunities with rates in that area, and the market is generally soft. So house prices, I mean, look, if it wasn't for this correction, we have a affordability issue here in Canada, and prices a little softer will help people get into the market. So I think, as it was mentioned by more than one person earlier, if you're looking as a long-term investment, then yes, go for it. Buy property, buy multiple properties, but make sure that you're not going to be over leveraged and that you've got some buffer in there in case rates do go up. But you can always lock in your rate to 3 years or 5 years to help protect against that. But anytime you always need a diversified portfolio. I like to invest in mortgages. You can get your money out usually pretty quickly. You can earn returns of 8, 10, 12%, depending on how much risk you're prepared to take. And you don't have to worry about tenants, toilets, taxes, property taxes, that is. And mortgage investments are RSP eligible as well. So yes, sure, there's still opportunities in real estate, but maintain a diversified portfolio. Never put all your eggs in one basket. That's what I got.
All right. Thank you, David. Appreciate it.
Thank you.
We're going to move to the next one person is going to be, come on. Jyoti, you have left already, by the way, today. Now we're going to introduce our new guest, Tanya Grubik. She is especially worked with real estate investors, developers, and multifamily builders. Tanya, it's all yours, my friend. Tanya?
Hi. Okay. Yeah. It's interesting. Right now, I have couple properties. I can email you if you are interested. This is something like I have one big development, and also I have one property that needs to be subdivided, and potentially you can build the 2 fourplexes. The other one is for 6-story buildings. Like I see that could be a new opportunity for developers. Rezoning is coming. You can get pre-approved. You can get from the city everything much faster than before, and I can see opportunity in that regards, and also I can see opportunity in buying new properties in new development here in Vancouver. Developers are offering big incentives. Even they're offering a huge huge opportunity for realtors that could be that we can share it, of course, with investors. What else? I see, depends of city from the city. You know, we have a SkyTrain here that is coming to, I'm not sure if you are familiar with the Langley, Fraser Valley. Are you guys familiar with the Vancouver area, Greater Vancouver?
Yes, quite a bit.
Yes. And for example, now it's a great opportunity to buy land in one part of the town where the other part is over expensive. And the trend is that people are going to the most expensive city right now at the moment, but investors are buying in area that is far away from the SkyTrain. Now it's too late to buy, you could buy 10 years before in that area, but now uh, it's not attractive to investors. My family, we are investors as well. We buy homes, renovate them, and then rent them, hold to, when you rent, you can get more quality clients, renters. I really appreciate them. I keep them as a gold. I love tenants, even they have more rights in this province, but it's very important to have good tenants. And I'm sorry I didn't prepare for this.
No
I'm just
problem. Tanya,
talking.
okay, here's something I'm gonna throw at you.
Yeah.
Hold on, I'm gonna share something very powerful with you. Some of the investors are developers. They will return single family to 6 units. That's number one. A lot of these
Yeah.
investors want to buy foreclosure properties or
Yeah.
distressed properties, and the property is upthing, and don't mind doing some joint ventures and so on.
Yes.
Not too much into pre-construction, not typically into regular buying, but these investors are looking for opportunity
Okay.
where they can excel and they can multiply. They call 10 times. There's a reason for it. But anyway, thank you so much, and we'll
Thank
be
you.
talking.
Just to add something for in regards to foreclosure. We have many foreclosures here, but people end up by paying for foreclosure more than listing price because they get
Yes.
emotional, That's not always good
True.
deal. But
But
yeah,
what
but
we
thank
what
you.
yeah, our investors know how when to buy foreclosure. It's always pre-foreclosure. Another thing is called redemption. So our investors are aware all across Canada that any property which got sold in Canada under foreclosure or power sale must be sold at fair market value. So we are
Yeah.
quite aware of it. But there are opportunities if you can catch the pre-foreclosure, you can get a much better deal, much
Yes,
better terms, and so on.
agree. Agree.
Great. Thank
Thank
you,
you.
Tanya. Appreciate it. Now we're going to move to the next person. Ah, man, don't like it. The tax man who takes all the money or half the money. So what you going to do with it? Well, we're going to bring our guest speaker and a special person, Gerry Hogenhout. He is not only a CPA, but he is licensed in 5 different techniques and he is buying properties. He's going also into other provinces, which is nice and warm. He likes to invest in US, Costa Rica, Mexico, Dominican Republic. And here is the difference. Is there a massive difference between paying taxes and overpaying taxes in Canada? Gerry, it's all yours.
Thanks very much, Navtaj. Yeah, overpaying tax. Well, that does not that does not happen in my world. But I'll explain how that happens. It's actually not that uncommon. Um, so if you're on a T4, a lot of time, most tax returns that get filed actually have a refund. So you're overpaying your taxes, and if you're a T4 employee, there's forms that you can file to reduce the amount of taxes they withhold from you if you have certain types of deductions, RSPs, other stuff. So if you're getting a refund every year, if you're a T4 employee, you may want to look at having the tax reduced at source. Now, some people just look at it kind of like a forced savings that at the end of the year they get a refund, and that's just kind of a little bonus for them. But in my world, that doesn't work. Not only do I not like paying taxes, I certainly don't like overpaying taxes. Now, when you move over to the self-employed people, where probably most of us are, I see a lot of people overpaying tax under this scenario. When you file a tax return in 1 year, and if you owe more than $3,000 in that 1 year, the CRA requires you to send installments for the upcoming year. And the problem is the CRA will base those installments. Well, actually, first of all, CRA doesn't tell you what the installments is. If it's a corporation, they won't tell you what the installments is. If it's a person, they will tell you what the installments. But the installments they will make you pay is based on the income tax return you just filed. Okay, so now you're prepaying the tax for the upcoming year based on the tax that you paid this year. Now, what happens if your income goes down? Okay, so technically, the tax installments that you're required to pay are the lesser of. Okay, that's very important. It's the lesser of what you paid last year and what you expect to pay this year. So we see a lot where people just pay their installments based on last year's income. And if they do have less income this upcoming year, they're going to get a whole bunch of that money back. So it's very important to address that, to look at that, to understand what's going on, and make sure that you're paying as minimal tax installment as possible. Now, here's another thing. Many of my clients, myself included, I'm self-employed. I do not pay tax installments. I'm supposed to pay tax installments, but I don't. And the reason I don't is because simply I'd rather use that money that I'm supposed to send to CRA and use it for, real estate investing. Now, what is the downside on that? So if I do not pay my installments, which I do not do, they will charge me some what's called installment interest. So they're going to say, you should have sent us some installments and we're going to charge you some interest. That interest is actually nominal. What CRA charges as interest is not that bad. They adjust it every quarter. It's around 4 or 5%. So I'm quite happy to not pay them the installments and just pay them a little bit of interest at the end of the year. So certainly, again, overpaying tax, that's not in my vocabulary, but I do have a lot of clients that we end up getting refunds. They have overpaid their installments. And that becomes a personal choice too. Some people just don't want to owe any money to CRA. They just want to make sure that their taxes for the upcoming year are covered. But just understand that your obligation is to pay the lesser of, as an installment, your obligation is to pay the lesser of what you paid last year and what you think you will pay this year. And the problem is, for the upcoming year, most of us don't know. We don't know. We're going to have a good year, a bad year. So that's become a little bit of an unknown. But also the thing that we do with a lot of clients is we keep track of their installments. You're supposed to pay an installment every quarter. So if you've paid an installment in March and you've paid an installment in June, we could sit down and go, hey, should you really be paying a September installment? If you're having a really, if you have not as good a year, you should stop paying those installments. So it's just something like most tax planning. It's a year-round thing. It's something that's not looked at once. It's an ongoing process that we look at. So again, overpaying tax is it doesn't happen in my world, and we try not to let our clients overpay our tax. So big difference. Use the money. Don't give it to CRA. Invest it for yourself. Try to make more money on your money than what they're going to charge you in interest by not sending the installment. Okay, that's what.
Thank you, Harry.
Thank
Thank
you
you so
very
much.
much.
Appreciate it. Don't mean to rush you, but we are
Thank
running out of little bit time. We're running behind.
Yeah.
All right, moving forward with this thing is Ernie. Ernie, are you here? I guess not. I didn't see him. All right. So, worst year for Toronto sales. Wow. Whoa, 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 whoa. What happened? The fact speaks much louder. What are the facts? Well, the 2021 was the highest number of sales, 127,000. And last year, in 2025, it was only 63,000, which are more or less in the same ballpark as 2,000. Well, we all are aware, but again, these offer opportunities. Bad news is also bring great opportunities. There's no such thing as bad. You look at it, twist it, and you'll find opportunities out there. That opportunity is going to be introduced by my friend and my sister, Randy Goodman. Randy, it's all yours. Randy?
Thank you, my brother. Okay, so before we talk about 2026, we need to be honest about what 2025 was actually about. 2025 wasn't a dip, it wasn't a pause, it was a systematic reset, and the numbers confirm it. If it felt like the market was at a standstill last year, that's because in many ways it was. Let's ground this in real data. According to TREB's year-end market watch, the GTA recorded over 62,000 homes in home sales in 2025, which is down 11.2 compared to 2024. At the same time, new listings increased by over 10%, reaching approximately 187,000 listings for the year. So what does that tell us? We had more inventory coming to market, but fewer buyers stepped forward. That's not seasonal, that's structural. Pricing reflected that shift as well. The average selling price for all of 2025 came in around just over $1 million, which is down roughly 4.7 year over year. And if we zoom in even tighter, looking specifically at December 2025, which gives us our most recent snapshot, sales were down about 9% year over year. New listings were slightly higher, up close to 2%. And the average selling price in December was just over $1 million, down about 5% year over year. That's a clean year over year comparison. And it confirms the broader theme: price pressure, elevated choice, and cautious buyers. So this is important. This was not a crash. We didn't see forced selling on a mass scale. We didn't see financial system failure. What we saw instead was affordability shock. Interest rates changed buyer psychology. Investors pulled back. Developers slowed or paused projects. Households simply waited. This is why 2025 didn't feel dramatic, but it was deeply transformative. This brings us to 2026 and what I call the split reality market. On one side, highly leveraged owners, overextended investors, projects that only worked at ultra low rates. On the other, cash positioned buyers, strategic investors, creative financing, income first underwriting. These two groups are operating in completely different markets, even within the same city. We're no longer in a national housing cycle. Downtown condos, suburban freeholds, secondary markets, student rentals, they're all behaving differently. That's why broad headlines don't help investors anymore. Local data, absorption rates, and inventory trends matter more than the national averages. This is also where opportunities start to quietly form long before headlines catch up. Thank you.
All right. Thank you, Randy. Appreciate it. Now we're going to move forward to the next one. All right. So Halifax is booming, by the way. That's another city one has to look at it. Believe it or not, the rents in Halifax are a little higher than Toronto and Vancouver. Who could have thought? The rents are up, prices are up. But again, just another soft spot. So here are some rebates for all Canadians. If you all own any piece of property anywhere in Canada, since you're a taxpayer, you own a property, please take advantage of $10,000 to $20,000 available for you. If you want, you can just share GPT if you like it. If you want a copy of the slide, I'll be happy to share with you. So, Vancouver, what does they tell you? Vancouver and Toronto, they tell us they're building 29 more hotels. Toronto and Vancouver have something in common. We don't have much land. Towards south, in Vancouver, they have ocean. On the north, they face the mountains. In Toronto, we have Lake Ontario, and then we have the Greenbelt. But lots of visitors come to Canada. When you say Canada, it means Vancouver and Toronto. 5,800 rooms. That's incredible. What does that tell you? Rental in demand. As long as they live something Airbnb, a lot of investors will be looking into it. And that'll be another thing. So here is some scenario where people overboarded and they end up losing a couple $1 million. There's a piece of property. It's in a very, very good location, by the way, in West Vancouver, they call it. They paid 4.8. They end up losing it, maybe $2 million. But that happens in every market. Here's another one in Victoria. And this one, there was a huge loss again. And this is again from 3.8 to 1.2. Here is a deal in Toronto. And this is on 505 Russell Hill Road. They paid $3 million for the land. They built it. I do believe the cost was more than $5 million on it. They listed for $19 million and couldn't sell it. And there was a forced sale. And the lenders are going to pull the plug on you. Eventually, it got sold for 7.5. I believe this was a great steal. As I said, there are a lot of opportunities in this market. Can you imagine picking up a piece of property worth $20 million for $7 million?
Can I jump in on that if you don't mind?
Yes, you can, please.
That was my dentist's house before they tore it down.
Okay.
This particular house, which is around the corner from me,
Mm-hmm.
is so odd in design. They're lucky to have found a buyer.
Oh, okay. But I understand they had an AAC appraisal for $20 million.
Yeah, well, so what?
Well, again, it's the market. But in my opinion, I think the construction is done extremely well. Very well built, in my opinion. I haven't seen it from inside, but I believe it's a great location. And it may not be in the right location when it comes to the road or the sideway.
No, it's in a very good location. It's not a great piece of land because it's a wedge shape.
Right.
One of the best streets, one of the best areas in Toronto.
Excellent. Here's another one, which I mentioned before. This is in Ottawa. And people say, what are you doing in Ottawa? A loss of 1.2 million. Again, this is something, I believe I shared this thing in the last meeting as well, though. That's a huge loss. People, they paid almost 2 million, got sold for 727. That sucks. That hurts. The next one I'd like to share you half price in Toronto. This is a typical townhouse sold, I believe, at the peak of the peak, sold for $850. Now it just got sold for $430. It got just sold and a couple of days ago. As a matter of fact, I believe, I don't have the date for it, but again, it's half price. Are there opportunities? Yes, there are opportunities out there, in my opinion. Again, now the whole thing has shifting, by the way. You don't have to do speculation. What do you do? Multifamily, great opportunities out there. Those homeowners who want to increase their income forever, there are opportunities out there. And they want to help you. And there's a financing available. And some of you are already doing it. But some of the investors are encouraging them to do it. You don't need to move into whatever. You don't need to download it. If you are feeling it, that's okay. Opportunities. So single family to multifamily. Now, this is something we call build to rent, purpose-built multifamily rental communities. This is going to grow tremendously for the next 10 years in Toronto, Canada. I don't care where you are. And there's a huge, huge opportunity out there for investors, or I call small developers, or anybody who has a couple. In real estate, you can come into wholesaling with not much money, but if you already have a couple $1 million, or you have 500,000 or up to $1 million of equity, you should definitely look into multifamily development. Why? It needs only 5% down, only 5% of your cash, and everything's available. Thank you to, don't people gonna get on my case when I say Trudeau, because he introduced the CMHC MLI program that give a lot of leverage to Canadian investors, especially you own multi-units or multifamily, more than 5 units all across Canada. So here is the deal. We need 3.2 million houses in the next 10 years. How the hell are we going to do that? Nobody's going to provide it. And there's going to be what? A lot more rentals. Now people are selective. They don't want to go into a little bit called pigeonhole. 200 square feet or 400 square feet where you cannot even have a bed or something. And now this adds a tsunami, in my opinion. Those investors who are educated, who are going to learn the blueprint, how to do it, in my opinion, next 10 years, home run every day. Now, here is a deal. And Barry, I want you to look at it. If you can tell me, it's on MLS. In Roncesvalles, house properties, 168 Pearson, Laneway housing, 3-bedroom, 1,100 square feet, heated floors, 9-feet ceiling. What's the asking rent? $6,000 a month. My question to you, listeners as well as all the investors, what do you think it'll cost you to build a Laneway house, because you already own the land? And if you want to build it, even if it costs you, let's say it's 1,200 square feet, and your cost is $300 to $500 per square foot on the high end, would that make sense? Absolutely. Is there a market there for you? Yeah, absolutely. There's a huge market. People don't like to go to apartment buildings. They don't like to condos. They want to have a little bit in the backyard. They like to park in the car on the same floor. And this, in my opinion, could be a great opportunity. It's a great thing. It's out there on MLS. Check it out and see how does it go. Because 3-bedroom, 3-bath is the most desirable rental as we speak, in my opinion, based upon the facts I collected from CMHC. But again, this is a great opportunity, those who want to look into it. So those who are looking into it, I just want to say thank you very much. We are 10 minutes ahead. I'm sorry, but there was a couple of things we have to do tonight. I want to sincerely thank everybody and for joining us. We look forward to see you in second week of February. I believe it's February 10th. If you're not a member, make sure you get a membership, please. Thank you and good night, everyone.
Thanks. Good night.
Good night.
Yeah.
Good night.
Thank you, Uncle. Thank you.
Thank you. Good night, sir.